Hi, super investors. Tesla stocks, the price has been down by 31% this year. So the question is, should we buy Tesla stock right now? This is the update for this month. So Tesla, ticker symbol TSLA, has a market cap of $536 billion. And they have a total revenue of $96 billion, up by 18% since last year, 2023. And the net income is $14.9 billion, up 19.4% since last year. Free cash flow has been down by 42%, but still healthy at $4.3 billion. The current EPS is $4.30. This makes the P ratio 39 times and the PB 12.6 times. The gross margin and the net margin is pretty healthy at 18.2 and the net margin at 15.5. However, let me take you to this particular portion where the net income is $14.9 billion. You can see an asterisk here because $6 billion is a one-time tax benefit, meaning to say next year they may not repeat this kind of income with this kind of margin. For quarter 4 in 2023, there was reported weak growth of only 2% increase. This is very alarming and also concerning for investors. And their operating margin is reported to be weak at 8.2%, which is lower than some of the other automobile manufacturers like Toyota. The good news is they have delivered 1.8 million vehicles, which is a record high. So should we buy Tesla right now? Let's look at the pros and the cons. The pros is there is still future growth in terms of their energy, charging and software, even though their delivery of their electric vehicles is slowing down. So in the future, where driverless vehicles is still a big thing, most of these other components may increase. So let's take a look at the valuation, assuming that Tesla will continue to grow for the next 5 years. Let's assume that their automotive department will still grow by 15%, which is quite still a decent growth. Their energy by 25% and software and other services by 30%, and this is driven again by self-driving vehicles. If this happens, it will reach a $215 billion worth of revenue. Remember, I mentioned the net margin, although it's 15.5%, it is driven by a one-time tax benefit. I'm going to be conservative and say that their net margin may drop to 10%. It may be higher, it may be lesser, but 10% is something I'm comfortable with. Therefore, the net income 5 years from now is estimated to be $21.5 billion. Again, right now, the net income is 14.9. It is quite a decent increase. 5 years from now, I believe that Tesla will still be a high-tech growth company. Therefore, the P ratio will still be around current range of 30 plus. I'm going to be conservative and put it at 35 of PE. And therefore, with the net income multiplied by the PE, the market cap 5 years later will be $752.5 billion. Looking at the current market cap of $536 billion, with a 5 years growth to $752.5 billion, the compounded annual growth rate will be 6.99. Meaning to say, if we invest in Tesla today, this will be the kind of returns we can expect based on all these current assumptions. So if you ask me right now, I will not buy Tesla for a 6.99%, nor will I hold if I'm actually having Tesla right now. For me, my opinion is I will not touch Tesla due to the risk they have and also the slow in growth. Comment below what you think and also follow us to get more stock analysis.